This video is created by Jagrat Creations. It is on piecemeal distribution capital surplus method. I want to solve one sum here before you, which was asked in IPCC examination. Just observe the sum on the screen that I intend to solve here before you. X, Y, Z are in partnership sharing profits and losses in the ratio of 5:4:4. The balance sheet of the firm as on 31st of March 2016 is as under. On asset side, factory, building, plant and machinery, trade receivables, inventory, cash at bank, X capital, Y capital, Z capital, Y's loan, trade payables. On balance sheet date, all the three partners have decided to dissolve the partnership. Since the realization of asset was protected, they decided to distribute the amount as and when feasible, and for this purpose they appoint Z, who was to get as his remuneration 1% of the value of assets realized other than cash at bank, and 10% of the amount distributed to the partners. Assets were realized in piecemeal as under. First installment, second, third and fourth last installment. Dissolution expenses provided for estimated at 12,000. The creditors were settled for 63,600. So creditors are 66,000. Payment settled for 63,600. This is the discount received. You are required to prepare the statement showing the distribution of cash amongst the partners. Highest relative capital method. Now see, this is a sum on piecemeal distribution that I am supposed to solve. The number of columns prepared to be prepared in a piecemeal distribution statement depends on liability side. So there will be one column for X capital, second column for Y, Z capital, these three capital columns, loan column and outsiders creditors column. There will be one more column for cash to be distributed and particulars column. So let me prepare first of all piecemeal distribution statement. So this is a part of the sum that I have read before you. So I will write down capital of X, Y and Z. Y's loan 18,000, creditors 66,000. So these are the balances I have recorded. Now amount available for distribution in the first installment will be cash at bank balance 1,100 and the first installment 74,600. So total amount available for distribution in case of first installment will be 76,600 and 1,100. So this is the total amount available for distribution at the time of first installment. Now out of this cash available for distribution, you should put aside first of all amount required for dissolution expenses. So estimated amount to be provided for dissolution expenses 12,000, that is to be deducted. Now you are required to pay remuneration to Z at the rate of 1% of the value of assets realized other than cash at bank. This includes cash at bank. So you can't give 1% on the cash and bank balance 1,100, but you have to pay 1% of first installment, that is 74,600. So Z's remuneration at the rate of 1%, 74,600, 1%, 746. This is the remuneration to be paid to Z for the efforts that he has taken to realize the first installment. So these are the payments to be deducted. So cash available for distribution will be worked out 75,700 minus 12,000 minus 746. This is the cash available. Creditors are 66,000. Now first payment is to be made to creditors. Now 66,000 creditors are there, but the settlement made is 63,600. So the total amount to be paid to creditors is 63,600. I have got a cash balance of 62,954. So the entire cash balance will be given to creditors, and this is how the amount paid to creditors 62,954. So 66,000 minus 62,954 payment made to creditors. Amount yet to be paid is 3046. Now have we paid 3046? No, because we have received a discount, and the discount receipt will be transfer to profit and loss account, or we can say that the discount will have a balancing effect in our realization account. So now the second installment is received. From that you are required to pay the creditors after deducting the discount. But this is the second realization. On that you are required to pay 1% of the second realization to Z as remuneration. Now how much is the discount received from creditors? The total amount outstanding is 3046 and the total discount received 63,600 is the amount settled and the liability is 66,000. So 66,000 minus 63,600 is the discount received. That will be deducted. So the final payment to be made to creditors is 646. So 646 is paid to creditors. Now 3046 minus 646. So the remaining amount is now not to be paid to the creditors, and that is transferred to profit and loss account, and that's I have shown that by red color. This is the cash balance available for distribution. This is transfer to profit and loss account. Just to demonstrate it distinctively, it has been identified with different color. Now from this, you are required to first pay a wise loan. So now you have to pay wise loan. 18,000 is paid to wise loan. Now the amount is available for distribution amongst partners. And whenever you are required to pay to the partners, you are required to pay a remuneration to Z at the rate of 10% of the net payment made to partners. So we are required to work out the remuneration payable to Z, because now the instance for payment against partners' capital has arisen. So we are required to prepare a working note for that. Now this is an important point. 10% of the amount distributed to partners. So if 100 is, let me prepare a working note for that. If 100 is paid to partners, amount distributed to partners is 100 rupees. Then Z gets 10% of 100. So total cash required is 110. So cash received for distribution is 110. Then 10 is the remuneration payable to Z. How much for? 49,962. So if you work out 49,962 into 10 upon 110, you will get the remuneration of Z. That is paid to Z, that is deducted 4542, that is deducted. Now you have got cash available for distribution amongst partners. So cash available for distribution among partners will be worked out to be 45,420. That is to be distributed as per highest relative capital method. Now let me explain you highest relative capital method or capital surplus method. I'll prepare a working note for that. The capital balance payable to the partners XYZ are 60,000, 40,000 and 50,000. Their profit sharing ratio is 5:4:4. So capital balance per unit of profit. So to get a profit of ₹5, Z's capital is 60,000. So for 5 units of profit, capital contributed by X is 60,000. So what is the capital per 1 unit of profit? So 60,000 divided by 5, 12,000 is the capital per 1 unit of profit. Same way if you work out for Y, for 4 units 40,000 capital, so 10,000 is the capital per unit of profit. 50,000 is the capital for 4 units, so 12,500 is the capital per unit of profit for Z. So capital balance per unit of profit, so that you can work out 12,000, 60,000 divided by 5, 12,000, 40,000 divided by 4, 10,000, 50,000 divided by 4, 12,500. Now X and Z says that, X and Z says to Y that for 1 unit of profit you are contributing 10,000. We are also prepared to contribute 10,000 rupees per unit of profit as you have contributed. So whatever the surplus contribution is there, we should get that surplus capital back first. So now 12,000 is the 10,000 is the minimum required capital per unit of profit to be maintained by a partner. So 10,000 into 5, 50,000 is the capital required proportionate capital required for X. For Y it is 40,000. It is already in ratio. And here 10,000 into 4, 40,000 is the capital required to be maintained by Z, which is in proportion to Y. So this is the capital required. So how much is the surplus capital? 60,000 minus 50,000. So surplus capital of X is 10,000. Surplus capital of Y is nil. And surplus capital of Z is also 10,000. So we are required to distribute 10,000 plus 10,000, 20,000 in priority to any payment made to Y. So we are required to make payment in priority to X and Z as against Y. So 10,000 and 10,000, 20,000 is to be paid. Okay, do we have cash of 20,000 right now? Yes, we have got a cash of 20,000 right now. So let us distribute this 10,000 and 10,000 to X and Z. No need to go for further iteration that out of X and Z who should get what amount first. Let us not bother about that. So what I suggested, if you have got 20,000 readily available, distribute that 20,000 straight away. No need to go for further working out that as amongst X and Z, who is entitled to receive first and who is entitled to receive next. If you want to work it out, you can do that. That's not a big issue. So 10,000, 10,000 surplus. So 10,000 divided by 5, so 2,000 surplus. 10,000 divided by 4, 2,500 surplus. So they are required to maintain at the rate of 2,000. So 2,000 to Z should get 2,000 first. And then next 18,000 will be distributed between X and Z, 10,000 and 8,000. That's a further distribution. But no need to go for it because I have got 20,000 ready with me. So 20,000 paid to X and Z, 10,000 each. Now their capital is in the profit sharing ratio. 5:4:4. 5:4:4 is the ratio. Now their capital is also profit sharing ratio. So all further subsequent distribution will be made in the profit sharing ratio. So this 25,420 available will be distributed in the profit sharing ratio 5:4:4. So if you distribute 25,420 into 5 by 30, so 9778, 25,420 into 4 by 30, same way 4 by 30. So this is the capital outstanding after distribution of available cash. Now let us go to the next installment. Third installment 40,000. 1% of 40,000 is to be paid to Z. Amount available now for distribution 39,500. 10% remuneration is to be paid to Z, that of net. So let me prepare a working note. If the amount distributed to the partners is 100, then Z gets 10% of 110. So if cash received 110 for distribution, then 10 is the remuneration of Z. How much for 39,500? 600. So 39,600 into 10 upon 110. This is the remuneration of Z. So now amount available for distribution 36,000. See, 36,000 into 10%, 3,600. This 36,000 will be distributed in the profit sharing ratio because capital is also in the profit sharing ratio. So it is distributed in the profit sharing ratio. So this is how 5:4:4 distribution is made. Now the capital available to be yet to be redeemed is this much. Now let us go for the next installment. Last installment 28,000. 1% of 28,000. Remuneration to Z. This is the amount available for distribution for partners. Let me prepare a working note. If the amount distributed to partners is 100, then Z gets 10% of 100, 110 is the cash required. So if cash available 110, then 10 is the remuneration. How much for 27,720? That works out to be 2520. So that remuneration of Z is deducted. Now the cash available for distribution is how much? 25,200. This 25,200 is required to be distributed in the ratio of 5:4:4. So 5:4:4 is the ratio in which it is distributed. So the capital against that last payment is this much. So the amount of capital that could not be redeemed at the time of dissolution of a partnership is because of realization loss. So difference is identified as realization loss. So loss suffered by the partners on dissolution of a partnership firm, that works out to be 16,684, 13,348, 13,348. This is the realization loss. So here I have prepared a piecemeal distribution statement by capital surplus method. This is an important sum that was asked by Institute of Chartered Accountants of India in examination. I have tried to explain you these things. I feel that you have followed all these things. Thanks to all.